let's do a mini business course on your business, right? So you're talking about companies like Remax and Shake Shack are using you. Again, you're an alternative asset manager and a market leader in monetizing tax receivable agreements. So let's do a 3-part mini business course on what that actually means, on how a company who's listening to this right now could recognize in 3 steps, that makes sense, I need you, and this is how, and how I can work with you. So what would step 1 be of that, Andy?
Step 1 is realizing that you have a large tax asset. So simplistically, things such as a net operating loss that you might have that's suspended in a passive format is an easy avenue, but every business has tax assets. We gave the example of your personal tax refund that you might be waiting for a month. When you go shopping and your significant other goes shopping in Europe, you might get a VAT tax refund from, name your favorite brand, Hermes, Chanel, whatnot. And when you go to the airport, Global Blue is willing to offer you a buy it now price for that VAT tax refund.
Mm-hmm.
Tax is the largest asset class in the world that people have never thought of. It is pervasive across our society, and everyone has a tax asset. Now the question is, how can you unlock it in a cost-efficient manner to create solutions that make sense for each individual?
Yeah. All right, good. Number 2.
Step 2 is primarily around accessing opportunity sets. And so to my last point about acquiring the asset and understanding your customer acquisition cost, it doesn't make sense for a firm to go out and buy each individual tax asset, primarily because there's such an educational element requisite for you to A, realize that you have a tax asset, B, for you to realize what the cost of that capital is to get that buy it now price. And so finding channel partners, might that be the likes of an H&R Block, where you can provide that factoring solution at scale and in a format and drive sufficient volume to overcome that CAC is a requisite in order to unlock this otherwise uncorrelated asset that many investors want to have within their portfolio.
Love it. Good. Number 3.
I think it's try to understand for yourself what the value of your asset and what your personal cost of capital is. Obviously, if our cost of capital is 20% and your personal cost of capital that you value your time and money at 10%, there's not a trade to be done.
Yeah.
And so understanding for yourself the size of your asset, how much does it cost to access a solution, and finally, what do I think my indifference point on a cost of capital basis makes sense?
Yeah.
Those are the 3 elements that I might bring to bear.
I love it. That was a good mini business course. I think giving people a lot of insight.